Let me invite the chairman of the session, Professor Najdet Santoy, who is former board member of the Central Bank of Turkey and also AOIFI Board of Trustees. The panel discussion is on the revision of financial accounting standards. I'll invite the fellow panelists as well. Mr. Irshad Mahmood, partner of Audit and Assurance at Deloitte and also a member of AOIFI Accounting Board. Mr. Parveen, who is representing Mr. Mahesh, the partner of Financial Services at KPMG. Unfortunately, he couldn't make it at the last minute due to the last minute engagement. Can I also invite Mr. Yasir Ismail Muzaffar, Head of Finance at Al Baraka Banking Group, and Ms. Fazila Gopulani, Head of Middle East at ACCA. I'll invite Professor Najdet to initiate the discussion with a brief presentation.
Bismillahirrahmanirrahim. Dear distinguished participants, ladies and gentlemen, Assalamu alaikum. I am opening the last session of this conference. Afternoon, you are tired, but I hope we will provoke your minds and will close the conference enjoying with it. I congratulate AOIFI with this 14th edition of World Bank AOIFI conference. Now we have a session with title Revision of AOIFI's Financial Accounting Standards Project. The title includes a term revision. Why revision? Why does AOIFI makes revision on its standards? And in the introduction, in the booklet of the program, it is said that there is a wider spectrum of stakeholders, more diverse international stakeholders, extensive financial reporting requirements. That's why AOIFI needs to make some revisions. In this point, I wish to show you several slides to make an introduction to the session and to provoke your minds. What is the economy politics of standard setting organizations? Yesterday, President of IDB mentioned infrastructure institutions. We have 3 infrastructure institutions: AOIFI, IFSB, IAFM. Why we have 3? Why not only 1? Which need cause to found these organizations, and which stakeholders needed these organizations? Sorry, I have given a Turkish presentation recently. I couldn't translate into English. What are the characteristics of the stakeholders? First, the operating financial institutions, we call them Islamic financial institutions, IFIs. In the beginning, it dominates with Islamic banks. Also, there are tekafül companies and asset management companies. This is the first stakeholder of standard setting organizations, IFIs. Second, those audit companies which make external audit of these IFIs. They are also stakeholders. The third one is law companies. The law companies are also stakeholders. and also the regulatory bodies of the countries which IFIs operate. The Islamic finance industry started with banking, but it developed to capital market instruments, to takaful, and now we are talking about responsible finance. Yesterday and today, many presentations include United Nations Sustainability Development Goals. These are bringing us new stakeholders. If we have an outlook on the standard setting bodies in conventional and Islamic side, in conventional side, there are BIS, ISB, IFAC, IAIS, IOSCO, ISTA. In Islamic side, we have IFSB, AOFI, IIFM. And these are making cooperation with, Islamic ones are making cooperation with the conventional standard setting organizations. Now, since it is said now we are having wider spectrum, we can add in conventional side Sustainability Accounting Standards Board, also Global Reporting Initiative. Also, these standard setting bodies should make cooperation with those conventional institutions. With this point which I wished to raise and touch upon, I wish to introduce the panelists. We have only one presentation. It is jointly prepared by two colleagues. First colleague prepared the presentation is Irshad Mahmoud. He is from Deloitte Audit Company. Before Deloitte, he was with PwC. He assists clients with complex industry and financial reporting issues. This means complex industry and financial reporting issues also include Islamic financing issues. He is member of AOFI Accounting Board. Also, he is member of AOFI Technical Accounting and Interpretation Committee. Also, he works for AOFI working groups. Also, he is in the editorial board of Journal of Islamic Financial Accountancy, published by AOFI. The second colleague prepared the presentation. Mahish Bala Subramanian is absent. Unfortunately, he is not with us. He will be replaced by Praveen Manik, young colleague. Praveen Manik is a chartered accountant from India. He has experience of more than 11 years in Islamic banking, and he is graduate from Mumbai University, India. Also, for commentators, one will be replaced. In the program, there is Ms. Fazila Gopalani. He is here. She is here. Fazila is head of Association of Certified and Chartered Accountants in Middle East. She is fellow certified and chartered accountant since 15 years. Previously, she was senior manager at PwC Academy in Dubai. She had her undergraduate and MBA from UK. The other commentator will be replaced by Yasser Ismail Muthafa. He is here. Yasser is head of finance in Al Baraka Banking Group. Before that, he was manager at Khaliji Commercial Bank. Starts career at KF Kuwait Finance House, Bahrain. He is professional CPA, MBA from University of Bahrain, CPA by AAOIFI. He is certified by AAOIFI, being certified Islamic public accountant. After this introduction, I will give the floor to presentation. Who will make the presentation, please?
Thank you. And good afternoon, everyone. I know it's the most difficult session, the last session, and especially last session after lunch break. So it's easy for us, for the presenters, difficult for the audience and the listeners. I would like to run my presentation, if anybody can help me on that. Yep, please. Move on, please. Okay, a quick introduction. I'm a partner at Deloitte in Bahrain. Prior to that, I was partner with PwC in Bahrain. I'm a member of the AAOIFI Accounting Board, as well as member of some of the working groups, as well as a technical accounting and interpretation committee at AAOIFI. My colleague Mahesh was unable to join today, so Praveen will cover his part of the presentation. Now, coming to the presentation, when we see that accounting, governance, and ethics, the accounting is something that we all are familiar with, that it provides a guidance on the accounting treatments. These are the accounting standards that AAOIFI has issued over the years. We have almost around 30 standards. Some of them have already been merged. The recent ones are more detailed standards, and they provide more guidance as well as more aligned to the IFRS as well as internationally acceptable accounting practices. So if you see that the accounting and the auditing standards, they are primarily providing the guidance in terms of accounting treatments, classification, and measurement of assets and liabilities, equity as well as income and expenses. At the same time, there are some major differences when it comes to the presentation. So AAOIFI standards are a very useful tool. They're very instrumental in providing the guidance as far as the presentation and the disclosures are concerned. We will get to that level when we will discuss why do we need to, or why do we really need to have the different set of frameworks or different set of accounting standards. Auditing standards basically provide guidance to the external auditors. The people who are sitting here from the external audit, they know that when we conduct the audit, we generally use international standards on auditing, because even the AAOIFI auditing standards advise the auditors to look at the international best practices, which are the ISAs, when they are doing the audit. So audit is generally conducted under ISAs, but the opinions are formed under the ASIFIs, which are the auditing standards issued by AAOIFI. The next thing is the governance standards. The governance standards mainly provide guidance on the Sharia compliance and supervision framework for the AAOIFI, for IFIs. So we are all aware that in almost all the countries where there is a AAOIFI framework followed, for the accounting purposes, and even for the audit purposes, there is a requirement for the Sharia audit. In Bahrain, we have recently introduced this requirement whereby the Islamic financial institutions have to appoint the external consultant, in most of the cases it's the external auditor, to run a Sharia audit. And this is in addition to the Sharia audit carried out by the internal Sharia advisors. In addition to accounting, auditing, and Sharia governance standards, there are ethics standards which have been issued by the AAOIFI, and these standards provide primarily the guidance to the accountants, auditors, and the employees of the IFIs. So basically, it's a complete, comprehensive framework that covers accounting, auditing, governance, and ethics. So that's basically the overview of the standards that has been issued by AAOIFI so far. Now, when we talk about AAOIFI or Islamic accounting, to be very precise, the question that have always come up is there are gaps. There are areas where there are the accounting from the Sharia perspective is different from accounting what has been generally used by the IFRS or the US gaps. Yes, there are gaps, and those gaps are primarily because of the nature of Sharia compliant products. Sharia compliant products have a different nature. Accordingly, their accounting would be different. And hence, there is always a gap. If you follow the IFRS, US GAAP, or any other framework other than AAOIFI, you will always see there would be some challenges as far as the comparability, reliability, and the compliance level of measurement is concerned. And that's the reason, that's the business case for having separate framework, AAOIFI framework, and that's the reason that after a lot of debate and discussion, bodies have accepted that yes, there is a reason to have a different accounting framework for accounting the Islamic or Sharia compliant products. When we look at what is happening globally, we see the developments. For example, IFRS are developed and continuously being developed. We see the new standards are always coming up from IFRS or IASB. But unfortunate fact is that there is no significant efforts on the standardization of accounting principles in Islam. So basically, the standards that are coming up from IASB are not catering or not providing the enough guidance to the Islamic financial institutions so that they can use the IFRS as a reference point. And that also creates a need to have a separate accounting and auditing framework. And that's why we have the AAOIFI that provide all the guidances that are required for the IFIs. At the same time, I would like to mention that if you can see the new standards that are coming up from AAOIFI are more comprehensive, more detailed, and try to make sure that as long as there are no Sharia issues and the products are as much as acceptable or can be used to do the accounting which is given under IFRS, they do not come up with a different guidance. They generally come up with the same guidance to make sure that there should not be any differences as long as there is no Sharia differences. Information needs of the Muslims and the Sharia compliant product is different from the information need that we have for the conventional stakeholders. For example, one of the things is the zakat, which is calculated for the Sharia purposes, 2.5% of the net wealth. And that zakah you cannot calculate from the information that is generally available under the IFRS framework or the conventional accounting standards, because the information that you need for the zakah purposes have a different significance, and that information has to be reflected in the financial statements so that the user can understand how zakah has been calculated. AAOIFI has issued a separate standard on zakah, and they are also in the process of revising this standard and coming up with a more detailed and comprehensive standard. When it comes to the accounting principles, we know that differences in accounting principles arising because of rejection of conventional financial system and its transaction with Islamic economic system other than Islamic financial system to be specific. I will be covering one of the hot discussion that we always have in our meetings is time value of money, how we will address this issue when it comes to Sharia compliant products. Now, this is again, we are saying that the conventional accounting is mainly used for the purpose of allocating the scarce resources available to best efficient and profitable manner. And whereas the Islamic accounting has got its own uses, and this is not only about having different accounting, it's basically representing the different of the products offered by the conventional institutions or by the Islamic financial institutions. And we are not here to reconcile those differences. Those differences are inherent in the nature of these products, so, and some of them cannot be reconciled. Now this is about the conventional accounting users as well as the Islamic accounting users we just covered in the previous slide. Now the time value of money. This is a concept that has been debated a lot. People will come up and they will argue with you for hours and hours, and you cannot beat them when it comes to not accepting the fundamental concept that money is not a commodity. From the Sharia perspective and from the Islamic perspective, money is not a commodity. It's just a medium of exchange. You cannot say that you are doing the trading or the transactions in money. So when keeping this thing in mind, then what is the alternative that we have under the Islamic or Sharia compliant products? We call it time value of the economic resources. For example, if we have a murabha transaction, we say time value of the underlying commodity. When we have a ijara transaction, we say the time value of the underlying asset, which is mostly the ijara mintahiyya bit tamlik. So with that in mind, we cannot accept that there is any concept or under any circumstances we will accept that the time value of money will be reconciled. This is a permanent difference, and this cannot be reconciled under any circumstance, because that's a fundamental between the conventional finance and the Islamic finance. Now, there are some of the other major differences that we have seen in the practice when we applied the Sharia compliant accounting as well as the conventional accounting, and those are the differences where we have identified some of the main products. I would request Praveen to come and join me so that we can run this together.
Good afternoon, ladies and gentlemen. Thank you, Irshad, for setting the tone as such when it comes to accounting. The pressing need for change in the accounting standards with the evolution of the kind of transactions the Islamic banks are entering into. That's kind of reason why these major differences of IFRSs are major difference between AAOIFI and IFRS is been highlighted here. So to begin with, we have the investment account holders equity, which is different from the IFRS, and hence we end up having a split of our balance sheet of an Islamic financial institution between self-financed and those which are belonging to the investment account holders. The second difference is the linked contracts. While IFRS allows you to look at various contracts linked together, and there are concepts and various standards where you apply a look-through approach, whereas AAOIFI doesn't really have that part in it. Then you have the recycling and the OCI. You have the other comprehensive income which you have in IFRS, which is currently not in AAOIFI, but I understand that we're working towards a standard where there will be an introduction of a OCI for Islamic financial institutions as well. The recycling part is where you have your a reserve on where you have a fair value reserve. Currently under the IFRS standards, under IFRS 9 to be precise, you don't get to recycle the reserve, but the standard which is coming up on FAS 33 allows you to recycle that through to the P&L. So that would be another difference that would be permanent going forward. Then we thought a transition guidance would be something that is very essential. because if we look at IFRS standards, when a new standard is issued, there is a comprehensive transition guidance, which somehow till now we have not seen in the IOFI standard. So that would be good to see if we have a comprehensive sort of guidance on how you go about transitioning from the current standard to a new standard as such. Then going forward, we have revenue recognition. Again, that's one of the main sort of changes which have come about in the last couple of years in IFRS with the new revenue recognition standard. Here, I would like to give an example of revenue recognition on a time proportionate basis or upon percentage of completion basis, as we understand. Currently, under IOFI standards, it's only under istisna that you recognize revenue on a piecemeal basis, whereas IFRS 15 has a very detailed guidance on whether you recognize point in time or over the period. So again, that's one of the differences currently between IFRS and IOFI. Yeah, sure. Yeah, so quickly moving forward, we have a difference on leasing standards. Again, I understand there's the Ijara standard, which is getting revamped, would have an element of leasing which is getting covered within that. Your foreign exchange accounting, one of the significant sort of difference between IFRS and IOFI is the hyperinflationary countries. Now, IFRS requires you to do an adjustment for hyperinflationary countries before you do a consolidation into the parent entity. Now, this is missing in IOFI at the moment. Then we have the difference on the investment property. There is difference when it comes to consolidation and you doing an assessment of variability based on the variability of return or the power to govern an entity. This is one more place where there should be there is a difference between IFRS and IOFI at the moment. So moving on, as we said, there's this evolution of the kind of products that Islamic banks are nowadays offering, or generally in the finance industry, you do see a lot of new products being offered. So some of the things which should be are of a difference and should be addressed are presentation and disclosure. So I understand the FAS 1 is undergoing a lot of change, which would sort of give us more detailed presentation and disclosure guidance. Then you have sukuks. While the standards talk about limited type of sukuks, there are many different type of sukuks which are available in the market at the moment. So the standards don't really cover all of these type of sukuks, either based on service. Currently we only have asset-backed or asset-based sukuks, as we understand. Then you have hedging and derivatives. This is one more thing. Sharia does not disallow you to have hedging. The speculation is something which is not in Sharia compliance with Sharia norms. Hence, hedging should at least be covered somehow, because that's a need of the hour, and many Islamic banks would also sort of want to do hedging of their own portfolios. Then in terms of guidance, we look at microfinance institutions, tawarruk, because that's one product which is not specifically covered under a specific standard. We already spoke about the foreign exchange accounting as such. Dealing with own equity instruments. So currently many banks do have treasury shares, but we don't have a specific standard which talks about how do you deal with your treasury shares or other sort of shares that you have in your own entity. Then restructured accounts. Again, from the banking point of view, with the current state of economy, you do have a lot of restructuring which takes place in a bank, and there is no clear guidance in terms of how you look at the restructured accounts. Yeah, that's it from my end. Irshad, you want?
Just to wrap up our presentation, the case for separate characterization of Islamic finance transactions. So we have been Yeah, I'll just quickly wrap up this. When we say accounting must reflect the transaction in the reality and the right of sequencing, we also consider that there are certain products which, if you restructure, if you, I would say, recharacterize it, you will be in a position to achieve the same results. For example, Murabha. Even if you look at from the substance perspective, and if there is a sale of commodity and you recognize this sale as well as the cost of sales, the difference that will be left is profit element, which is deferred profit under the AAOIFI framework. So is the recharacterizing the product may give you the results that you can at least arrive at a guidance where you can use the IFRS set of financial statement, but that requires a thorough deliberation of the individual product by product to make sure that we do not lose the Sharia principles, we do not compromise on the Sharia principles while recharacterizing the transactions. And with this, I leave the floor open for the questions. And please, okay, thank you.
Thank you. Now I will give the floor to Fazila. She will cover the cooperation between ACCA and AAOIFI. Please come.
Assalamu alaikum, esteemed guests and respected delegates. It is an honor and pleasure to be here at the AAOIFI Conference and World Bank Conference. Thank you to AAOIFI for giving us an opportunity to comment on this topic. Being a chartered accountant by profession and now the head of ACCA for the Middle East, I can say that it has been a very insightful and informative 2 days. AAOIFI and ACCA enjoy a mutually respected relationship. ACCA greatly values the role AAOIFI has played in developing and progressing the standards for the global Islamic finance industry. Both bodies share common and strong interests in the sustainable development of the accounting profession locally and internationally, maintenance and advancement of professional education and ethical standards, the opportunity for individuals of ability to pursue a globally relevant qualification to enhance their career prospects and ultimately to maintain and develop the profession and the wider economy. We at ACCA are proud that we are working with AAOIFI to establish areas of cooperation and collaboration for the mutual benefit of both AAOIFI and ACCA stakeholders, and to enhance the reputation and influence of both parties. Together, we are committed to identify opportunities to support the development of the accounting profession and promotion of standards for the Islamic finance industry. As you all know, in recent years, Islamic finance has been one of the fastest developing finance models in the world. It has not been developing only in Islamic countries, but also developing rapidly in the Muslim minority countries. This is a worldwide phenomenon centered around Malaysia, Bahrain, and the United Kingdom. There are many factors which determine the adoption of accounting standards for an organization, namely legal, political, tax structure, internal and external factors. One of the major challenges facing IFIs lies in the preparation of financial statements under different accounting standards, and which may lead to problems of comparability, reliability, and compliance level measurement. One future area of research that is critical to Islamic accounting is the need for an Islamic conceptual framework so that standards for IFIs can be developed. It should emphasize issues like social accountability, full disclosure, periodicity, materiality, and reliability. The ground reality is that the IFIs are increasing their share in the global financial market at a phenomenal pace and have proven to be more subtle, prudent, and risk-averse in the recent financial crisis, and thus have captured the attention of neutral experts. It is expected that in the coming future, the global Islamic finance market will continue to grow. In addition, in the Muslim countries, who account for more than 1/5 of the world's population, business culture is still unorganized and non-documented. Things are now changing at a rapid pace, and accordingly, the information needs are increasing day by day. Having said that, when we as accountants try to envisage the future, we feel that the share of international financial institutions in the global marketplace will increase exponentially, and accordingly, the information needs of the stakeholders will be more significant and less probable to be ignored. Many Muslim countries have started or are planning to start taxation of businesses, and that is going to create additional stakeholders in the shape of taxation authorities and governments, and they will all require timely and accurate financial information. It may rightly be expected that a global set of accounting and financial reporting standards for Islamic financial transactions would be required that could portray the essence of Sharia compliance. Therefore, reconciliations between the accounting principles of the modern day and those which are acceptable from a Sharia perspective will be required. Possibilities will be explored for reconciliations between the principles defined by Sharia and the conventional accounting principles, so that the principle of comparability may not be compromised. Islamic finance is at an emerging stage and constitutes a small percentage of the global business. However, these issues have great importance for the Sharia-conscious investors. It is inevitable the global financial reporting standard setters to take note of these requirements in the time to come. There is an expectation that in times to come there will be better coordination between the standard setting bodies to serve the industry and stakeholders in an improved manner as the above expectations come close to reality. We may conclude that although from a pure Sharia perspective it is not easy to have convergence within IFRS, yet there are some options and alternatives to bridge the gap to as minimum as possible. AAOIFI has written this book, which was an interesting weekend read for me, on IFRS and the Sharia-based reporting, a conceptual study. And this is a step in the right direction in order to bridge the gap and emphasize on the material difference and similarities between IFRS and FAS. We need to appreciate the strategy adopted by AAOIFI Accounting Board on not reinventing the wheel, but rather identifying areas of value addition. I would like to once again thank AAOIFI for this opportunity to speak at such a prestigious conference. Thank you.
I thank Fazila for his presentation. Now I will give the floor to Yasser Ismail for his comment. Please.
Assalamu alaikum.
You have 15 minutes.
15? It's too long for me. At the beginning, I would like to thank AAOIFI because, have you noted, during the last 5 years, we have noticed a lot of development. The gap between AAOIFI and IFRS closed to some extent that it's manageable. We have major gaps, and as mentioned by Praveen previously, which are tackled by some standards which are going to issue in the near future by AAOIFI. One of them is Ijara, which we had several round tables. I have attended one of them. If Ijara is applicable by or approved by AAOIFI, the gap will be minor between our standards and IFRS. We have several areas which I would like AOFI to emphasize on. Maybe one of them is consolidation. They need to review consolidation standard. Phase 1 needs to be reviewed, where all the financial institutions or Islamic institution will publish balance sheet, income statement, and notes in similar manner, where you can see now some differences between the financial statements of Islamic institutions. This is very critical, and I wish AOFI can consider this as a priority. For Sukuk, I expect a new standard to come up for Sukuk as well. This is mainly highlight from my side. We can take your comments as question and answer in later stage.
Okay, thank you. Now, I will open the floor for questions and comments. Before that, I have taken 2 notes from the presentation. They say, very interestingly, AOFI standards cater for Islamic financial institutions only, not all business in general. That is correct, but do we need for a general standard? That is the question. Secondly, the presenters emphasized the expanding information needs as ethical investors and Sharia compliant stakeholders. Now, I open the floor for questions and comments. Please.
Thank you very much, Mr. Chairman. My name is Dr. Ibrahim Siddiq from Ajman University, UAE. My question really is about the conceptual framework. When you look at the conceptual framework under IFRS or IOFI, it looks very similar. Very, very minor differences you can notice there. So now in the development or looking for new standards, do we need to develop new standards or to bridge the gap with IFRS?
Thank you.
Some financial institutions are required, Islamic financial institutions are required to prepare the reports based on the IFRS. They have to follow the IFRS, many banks in some countries. So are they going to, or are we going to help them to go in the same way or to bridge the gap?
Okay, thank you. Who wants to give?
Okay. As I mentioned during my presentation, that we are not just replicating the IFRS as it is, firstly. And secondly, we come up with the IOFI accounting standards primarily for 2 reasons. Firstly, if there is a Sharia requirement, if we feel that the nature of our product is such whereby the Sharia needs cannot be catered by the IFRS, so we have to come up with the guidance to make sure that the product remains Sharia compliant and the accounting is basically reflecting the nature and the substance of the product. Secondly, there are quite a few areas where there are IFRS do not provide guidance that can be used to record the accounting transactions by the Islamic financial institutions. And these are the 2 main reasons that we have come up with the IOFI accounting standards where we believe that there is a desperate need. I'll give you an example. We don't have any accounting standard on property, plant and equipment. We don't have any accounting standard on inventory. We don't have any accounting standards, say, for example, on the depreciation. The main reason is that we feel that at the IOFI level, that these are the areas where there won't be any potential Sharia differences or Sharia gaps. But when we see that the nature of product is such, for example, Murabha or the rental part of the Ijara Muntahiyya with Tamliq, we believe that the guidance is required. And that's the reason there is a FAST 30, which addresses all those areas where there is a credit risk, but due to the inherent nature of Sharia compliant product, we have to come up with a proper guidance. So you might have seen that there might be areas where there is a commonality between the IFRS framework and the IOFI framework, but that's not going to make a reason not to come up with the new IOFI accounting standards. It is all driven by the Sharia compliant products and not by the similarities in the frameworks.
Okay, thank you. Do you want to add something? Okay. Another question or comment? We have 5 minutes. There will be General Assembly here. Okay, please, Irum.
Thank you very much for the wonderful session. My question is with Dr. Najdat. Prof, you have shown the first few slides and mentioning about the institutions, multilateral standard setting bodies. So do you think that IOFI should expand their working territories, or we need to have more institutions in order to take care of the issues faced by Islamic financial institutions? Thank you.
Thank you, Irum. Thank you for pointing to the slide. Actually, the reason why I refer to those three standard setting Islamic organizations, because their stakeholders are different, dominated by different stakeholders. IFSP stakeholders are dominated with regulators. Therefore, the standards of IFSP are helping, supporting the regulators of the countries which IFEs operate. When we come to AOFI's stakeholders are dominated with IFE companies operating the business, and those audit the financial statements of IFIs, Islamic financial institutions. There is a difference of approach. I would give the example of sukuk. Could you please come back to my presentation briefly? There are 5 or 6 sukuk standards. One is by IFSP, 3 is by AOFI, and there are several by IIFM. That means they have different perspectives. Each has different stakeholders, different interests, and different approach to develop standards. Look, IFSP has IFSP 19, AOFI has 33, 34, also there is 29, and also one Sharia standard, number 17. I cannot go in details. They have different perspectives. And IFM, Ijlal is here, they are preparing 2 standards for sukuk. That means 3, 5, 6 standards are prepared only for sukuk instrument by different standard setters. Is it correct? Yes, because they have different perspectives. Any question or comment? More question or comment? Please, briefly. We have only 2 minutes, please.
Bismillah ar-Rahman ar-Rahim. Muhammad Salim, Dr. Muhammad Salim from University of Bahrain.
I have seen your slide about foreign exchange, but you have not elaborated. My question is, in foreign exchange buying and selling, if the rates are different, then there will be riba, according to one of the hadiths of Prophet ﷺ. So my question is, because of this riba, are the Islamic banks are trying to avoid this buying and selling of foreign exchange? What is IOFI's position on that?
Okay. I think what you're referring is the slide shared by Praveen. He did not mean that as a buying or selling of foreign exchange. What he was trying to say is that the hyperinflationary macroeconomies, which is IAS 29, the relevant or equivalent accounting standard is not available under AOFI. If you go to the framework allows you that if you don't have the equivalent IOFI standard, and as long as it's not contravention to the Sharia, you can always use the internationally acceptable guidances. That's number one. And number two, this matter has been discussed at length at the IOFI accounting board level, whereby they might be coming up with the accounting guidance to address the issue of hyperinflation, and will there be a need to adjust your financial statements to make sure that they are almost comparable or compliant with the IFRS or the best practices. So there was no mention of buying or selling of foreign exchange.
Just to follow up, hyperinflation is not the issue right now. Not in GCC, not any other countries are facing hyperinflation. But what we are facing, day-to-day transactions of foreign exchange. Millions, if not millions, maybe billions of dinars and dollars. Every day there is foreign exchange buying and selling. So when these are bought and sold at different rates, the differences constitute riba. So,
and that is not allowed under the Sharia. So basically, there are two main countries in the Middle East, Syria and Sudan, where there are hyperinflationary implications, and Sudan is basically has adopted IOFI standards long time back, and there is a need to have guidance available to them with regard to hyperinflation. So there was no discussion, or Praveen did not mean to say that it is allowed under Sharia.
Thank you. The General Assembly of AOFI will be held in this hall. Therefore, I should close the session. Thank you for your patience and have a good day.
Thank you, Professor Najdat. Thank you for finishing the the session on time, well on time. Yes, please.
She is going.
Please. Now, to conclude the proceedings of the 2 days, let me first thank Allah subhanahu wa ta'ala for allowing us to have stimulating and fruitful discussions. And let me not forget to thank all the dignitaries who took their time out to join us here, the sponsors of 14th AAOIFI World Bank Conference, the speakers who traveled far and wide to be with us, and not to say the attendees of the 2-day session. MashaAllah, the attendance has been very good, and we can see that even the hall is about half full in the last session after the lunch. So we thank you all for being with us, and inshallah we look forward to welcoming you again next year for the Sharia conference and then the AOFI World Bank 15 conference. As for those who are attending the annual general meeting of AOFI, please remain seated as the proceedings will start in few minutes in this hall. Thank you very much. Bismillahir Rahmanir Rahim. We will start the annual general meeting for AAOIFI in a couple of minutes. Can I request everyone to take your seats, please?
السلام عليكم ورحمة الله. السيد الأستاذ الدكتور أسيد الكيلاني، تفضل. من بعد غير من بعد غير أشوف مني في أحد؟ Is there anybody from the board is here is not coming with us? Anybody signing or finished?
Since they were attending, signing was opening, but they were attending the session, so they didn't come to sign.
كمل. ايش رايكم نبتدي؟ بسم الله. بسم الله الرحمن الرحيم، الحمد لله والصلاة والسلام على رسول الله. وبعد يسعدني ويشرفني أن أفتتح أعمال الجمعية العمومية لهيئة المعايير المحاسبية والمالية الإسلامية في اجتماعها رقم 23 اليوم في 4 نوفمبر في مملكة البحرين. جدول أمامكم ويتكون من 5 بنود، فإن وافقتم عليه فممكن أن نفتتح الجمعية. طيب، بداية أود أن أسجل ترحيبي وتقديري الكبير لكم للحضور، وأسجل في محضر الاجتماع كم نحن سعيدين بلقائكم في هذا العام، وإن شاء الله تتكلل أعمال جمعيتكم العمومية وأعمال هيئتكم بالنجاح والتوفيق. البند الثاني هو بند approval of the minutes of the General Assembly meeting number 22 لعقد العام الماضي. هل هناك أستاذ عمر أنصاري any observation, comments, correction for the minutes of our last meeting?
Since we sent the documents, we have not received any correction, but if anybody has a correction, please let us know.
Then if there is no further comments on this, then we shall move a motion والاعتبار محضر اجتماع الجمعية العمومية رقم 22 سجلا صحيحا لاجتماعكم. ننتقل إلى البند الثالث وهو update of AAOIFI activities لسنة 2019 including strategic initiative.
Presentation. Update presentation. أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. I would like to present a very quick update of AOFI activities from 2019 up till now, since beginning of the year up till now. On the technical boards in particular, we have 8 standards approved this year, 1 exposure draft issued in addition to those, and 2 standards are finally issued. 9 board meetings, next please. 9 total board meetings till 9 months. It does not include the remaining 3 months. 9 board meetings, 65 plus working group meetings, and 20 plus public hearings in 10 countries they were conducted. On each of the boards, we have a quick update that Sharia board held 3 meetings and approved 2 standards, and there are total 14 projects in pipeline, 6 are in advanced stage. Final standards, Waqf and sale of debt final standards have been issued, and other details are available there in the details. For the governance and ethics board, we held 3 meetings and we finalized 5 standards which are being issued. Some are already issued and some are under final touches, will be issued within next month, inshallah, before the end of the year. Exposure drafts, we have issued 1. With regard to additional projects, for the older standards, we developed the basis of conclusion in line with the transparency requirement of the strategy project, and those are also completed. In addition to that, we completed a very comprehensive ethics project in which we visited multiple countries, conducted 100+ interviews, and have come up with a very comprehensive ethics standard. There were 18 working group meetings and multiple public hearings in different parts of the world. On the accounting board side, we held 3 meetings within 9 months. In the 10th month, there was 1 more meeting. There were 3 exposure drafts approved and 1 standard finalized. And there are multiple standards in the pipeline, including revision of FAZ on Zakah and Waqf accounting, which will be issued within this year, inshallah, as exposure drafts. There were 35+ public hearings in 10 countries for the accounting board, accounting standards as well. On the capacity building department, that is our SEPA and CSA program. Now on the CSA side, we have 1,036 members who have passed, fellows who have passed our exams, out of which 371 are active. On the SEPA side, we have 688 past SEPA fellows, out of which 143 are active as of now. Fellowship programs registration, as we have 68 registrations, total 83 registrations for SEPA and 199 registrations for CSA program as of now. There are now 28 exam centers and 12 master trainers developed for the SEPA side. And we have 36 education partners in addition to exam centers. We have 36 education partners in 28 countries. During the year, during the 9 months, there were multiple workshops conducted at KFH, NBK in Kyrgyz Republic, and on the Sharia standards and AIFC. In addition, there were workshops on Sharia standards in Bahrain. There was on accounting in Turkey, the Director Sensitization Program for Afghanistan Bank in Bahrain, and Sharia standard governance workshop in Kazakhstan. Other events include multiple webinars with ACCA, event with IFSB, etc. With regard to the strategy project, I will not go in detail. Last year, the Board of Trustees approved the strategy project, and the board, after the board approval, you remember we updated the General Assembly on the main aspects of the strategy project. I would like to communicate that with regard to the first major project, that is the corporate and legal restructuring of AOFI, we are in advanced stages, and we hope that shortly this will be completed. We have a target of next 3 to 4 months within which we will inshallah incorporate the new entity. With regard to other major projects, we have started some projects on the due process improvement for accounting, auditing, governance, and Sharia standards, which include the quality improvement, process improvement, and basis of conclusion. And in addition to that, one of the most important things is that we started and we are now in an advanced stage for our footprint analysis. I'm happy to announce that according to the provisional report, Alhamdulillah, 24 regulators around the globe adopt AOFI standards, at least one set of AOFI standards in full. 22 regulators adopt accounting standards, 21 adopt Sharia standards, and 18 adopt governance standards worldwide. These are 16 countries and 24 regulators that do. We are going to publish shortly the footprint analysis. Right now, our desk review part is completed and I'm providing you provisional report based on that. But however, with regard to the final output, we are working with the regulators, writing them back to reconfirm our understandings, and soon after that, we will publish that. In addition to these 24 regulators, there are 13 more regulators around the globe who adopt either our standards as guidelines or develop their own standards based on our standards or regulations based on our standards, or allow AOFI standards as a secondary reporting requirement. So this is a summary of the main update for the 9 months. It's a short update, but if anybody has a question, please let us know. Thank you.
شكرا. إذا كان في سؤال أو question أو ملاحظة على أنشطة الهيئة لهذا العام والاستراتيجيك انيشيتيف. والشكرا على تقبلكم لهذا التقرير ودعمكم ومؤازرتكم المستمرة لنا. البند الذي يليه هو رقم 4 وهو بالنسبة للأعضاء الجدد. والأعضاء الجدد لكي ينضموا إلى الهيئة لابد من موافقة الجمعية العمومية على قبولهم كأعضاء. السيد أنصاري. New members.
These are the new members between the last General Assembly till this General Assembly. According to the last statute change, the Secretariat and the Chairman were approved initially, the Secretariat recommends, and the Chairman approves provisionally, and we need the General Assembly to ratify and approve that these new members are added. So we need your approval on that. The National Bonds Corporation UAE, Al-Quraimi Islamic Bank Yemen, Al-Rajhi Bank Jordan, Watan First Institute Kingdom of Saudi Arabia, Citibank Limited Bangladesh, Bank Saudi Fransi Kingdom of Saudi Arabia, Eiger Trading Advisors Limited UK, Warba Bank Kuwait. These are 8. So we need your approval, ratification of the initial approval given by the Chairman. Thank you, sir.
إذا تمت الموافقة على انضمام هؤلاء الأعضاء لهيئتكم فسيعتمد ذلك من الآن. طيب البند الذي بعده هو الادوبشن of Board of Trustee Financial Statement. The auditor is here. Can you call the auditor? Please, can you read the statement or at least the opinion?
Thank you, Mr. Chairman. We have completed the audit for the year ended 31st December 2018. The financial statements has been already circulated to all the members of the organization, IOFI. I will read out the independent auditor's report, and after that, any of the members have any questions, we'll be happy to address those. Independent auditor's report to the members of Accounting and Auditing Organization for Islamic Financial Institutions. Report on the financial statements. We have audited the accompanying financial statements of the Accounting and Auditing Organization for Islamic Financial Institutions, the organization, which comprise the Statement of Financial Position as at 31st December 2018, the Statement of Income and Expenditure, the Statement of Changes in Equity, and the statement of cash flows for the year then ended, and a summary of significant accounting policies and other explanatory information. I will read out the opinion part. Opinion. In our opinion, the financial statement presents fairly, in all material respects, the financial position of the organization as at 31st December 2018 and the results of its operation, the changes in equity and its cash flows for the year then ended in accordance with financial accounting standards issued by Accounting and Auditing Organization for the Islamic Financial Institution and the Sharia rules and principles as determined by the Sharia Board of the organization. Signed by BDO on 7th of April 2019. Thank you.
For a minute. This is the account opinion. It is a clean opinion, as you can see, but the auditor is here. If there is any question you would like, observation, anything, he's here and ready to answer your questions. Or just in a week or two, the technical boards will be finished their terms, and we have the technical boards update on that. Umar.
Bismillahirrahmanirrahim. This year, since June, we started the process in advance, well in advance, understanding that the terms will be, the technical boards will be completing their terms. So the nomination committee first held its meeting for determining the evaluation criteria, that how the existing board members' performance should be evaluated. And after due deliberation, the board of, actually AAOIFI governance board also, governance and ethics board also first evaluated the criteria. Then our nomination committee approved the criteria. Based on that criteria, we evaluated, we performed an administrative assessment of the existing members, as well as they were requested to perform a peer review of each other, that each member has to evaluate other members. Those evaluations and self-assessment and administrative assessment were performed well in time. They were presented to the nominations committee, and in August we started taking the process of the new nominations, for which we announced publicly. We wrote letters to all the members and all the regulators who are working with AAOIFI, as well as we made public statements and press releases for that. We received a large number of nominations, and after due deliberation, we took them to the nomination committee. The nomination committee recommended names initially to the Board of Trustees to be approved in the meeting that the Board of Trustees held yesterday. But in addition to that, because this whole evaluation process and these things were new, in addition to that, the nomination committee recommended that there should be additional processes with regard to the new members as well, that there should be in line with the good governance practices. So based on that, we are now going to complete the additional assessment processes with regard to the new technical board members. The existing members, based on performance, those who have been performing well, whose assessment and evaluation is good, they will be continuing inshallah in the next board. And additionally, the new members will be elected based on assessment, final assessment, as I mentioned. So this, the board in its meeting held on, the Board of Trustees in its meeting held on 3rd November, that is yesterday, 2019, it decided that the names were decided, but they were subject to the final assessment of the nominations committee. So that function is delegated back to the nominations committee. Shortly, we will be completing that process of additional processes of evaluation, and after that the names will be announced. So we believe that within this month we will complete this process, and inshallah the new names will be announced. Just one thing, I would like to highly appreciate the work done by these boards in last 4 years on behalf of the management and Board of Trustees. Yesterday we presented a 4 years report to the Board of Trustees, and Board of Trustees highly appreciated the efforts done by these individuals. They work honorary basis, voluntary basis. There is no payment to them. Most of the costs are also taken by their institutions, and they worked very hard in developing standards of very top quality in an unprecedented speed. So the board highly appreciated that, and I would also like to appreciate that support and cooperation by those board members, technical board members, on behalf of the management of AOFI.
المتطلبات القانونية بالنسبة لنا لتعديل المجالس، وإن شاء الله احنا بروسس، هذا كله تحت يعني قدرتنا وسيطرتنا بطبيعة الحال، باستثناء المجلس الشرعي فهم الذين يقررون لأنفسهم، لأنه مكون في الغالب من قضاة، وإحنا يعني ما لنا إلا ندعو لهم إن شاء الله بالتوفيق. البند السادس هو البند السادس خلصناه، البند السابع هو other matters. فأستاذ تفضل. If there is anything on other matters. على كل حال هذا بيكون بهذا نكون قد انتهينا من أعمال الجمعية العمومية. ونشكركم لحضوركم وتفضلكم ومساعدتكم ودعمكم الذي يعني متواصل لنا في مسيرتنا، ونأمل من الله إن شاء الله التوفيق في المستقبل والنمو أكثر. متطلبات الصناعة المصرفية تزداد يوما عن يوم، ولكن نسأل الله إن شاء الله بدعمكم وآزرتكم أن نكون عند حسن الظن. كل عام وأنتم بخير إن شاء الله.